Hey everybody, it's Brian. Hope you're doing well today. Today is Tuesday, September the 1st, and here for just a quick live update. We're going to run through the markets. We're going to have a look at what's happening over in the futures market, key levels you might want to trade from, directions you might want to be trading. We'll have a look at forex and talk about, again, same thing, what should we be looking at there, currency pairings that are giving us some opportunity this morning, and then we'll roll on out of here and let you get on with your day. Important thing, I'll post the link again. I posted the link here on Facebook a couple of days ago. I'm speaking today at 3 p.m. Central, 4 p.m. Eastern at a multi-speaker event. It's a multi-day, multi-speaker event. So I'll be on stage, as will a bunch of people that I know, like, trust. I don't know everybody, don't get me wrong. I don't know everybody that's speaking, but I do know a lot of the guys that are up there that have great things to say. They're definitely experts in their fields. They're great at what they do and how they do it. Like I've said before, these types of events are really, really cool because it gives you the opportunity to be exposed to different trading styles and different approaches to the market. Trading is not a one-size-fits-all thing. There is no right answer. There is no right way to do it. What works for one person won't work for another person. Generally because what works for one person works for that person because of they've got certain triggers and certain filters and certain things in there that they manage that trade with that fits them psychologically, right? Remember, the subconscious plays a huge part in what we do in trading. So the same person, so another person tries to apply that same method and it, quote, doesn't work. It doesn't work because they don't actually work the method. They don't really do what's necessary, what the other person is doing. Maybe they move their stops differently. Maybe they don't take every entry. Maybe they take the entries, but only on the second time that the signal is given. There's so many variables that can go into it. Anyway, going down a rabbit hole with that. What I want to say is, hit the link when I post it in here again, or you can just scroll down on Facebook and find it posted from a few days ago. Hit that link and register. Check out, if you're interested in learning other things, check it out and see what's out there. It's a great opportunity to be able to see different approaches in the market. Maybe you can take some things that one person's doing and combine them with what another person's doing and make your own plan that's really going to fit you, right? Be careful though, if you've already got a plan, you've got something that you're working on, you're focused on, you've been trading for a while and you're finding your footing, finding your consistency with it, I will caution you, don't get blinded by the shiny object syndrome, because obviously, like anything else, everyone that's presenting, myself included, we're going to talk about the things that we do in the most positive light possible because we want you to participate in our programs, right? If you've got something and you're working on it, focus on that, get really good at that. Then, once you're good at that and you're consistent, then maybe start working on something else over on the side. But don't think that anything that's presented today or tomorrow or the next day is going to just magically solve all your problems. It'll be presented that way, but it won't, okay? So I just want you to keep that in mind, when you do attend this event or events like this. They're awesome. They're great events. They give you a lot of amazing information. Take with that, do with it what you will, but don't get too caught up in jumping from system to system to system. All right. So anyway, that's it. That's all I wanted to say. That's all I wanted to say about that. Isn't that what Forrest Gump said? And that's what I had to say about that. Anyway, what's going on today? There's not a whole lot of news we need to worry about out of the gate. I need to watch Forrest Gump. I haven't seen that movie in years. Anyway, what's going on today? Not a whole lot. There is some news coming up here in a couple of hours. It's 8 a.m. Eastern. These times are listed in Central Time. They're listed in my time zone. So 7 o'clock here. So at 8:45 and then 9 Eastern Time, we have these manufacturing reports and then also construction spending. These are obviously they're the previous month, but they're seen as kind of the canary in the coal mine. If certain things are starting to drop off or pricing's going up, it might be an indication that we're coming into a slowdown of certain things. So don't overthink it. Like I've said before, just be aware that the news is happening and adjust your trading plan around the news. If you've got something, maybe you're in a trade with a really tight stop, you might want to either A, consider exiting that trade, or B, well, I never like to widen my stops. I mean, you might just consider exiting that trade. If you're in another longer trade, you've got a wider stop and you can live through some chop around the news, then live through the chop around the news. But just be aware that sometimes around news events like this, price can get choppy. In forex, you see spreads widen considerably around higher impact news. Doesn't mean it always will, but it can. And just that widening of spreads can take you out of positions. So just be aware that the news is coming up. Don't try to front run the news. Don't sit there clicking refresh on the news, hoping to go, oh my gosh, it's really different from the forecast, so it's got to do this, and then trading that immediately. Let the market lead us. We always want to let the market lead us. I use that freight train analogy a lot. That's kind of the one I'm stuck on right now. I used to use surfing a lot, but I guess after being away from Costa Rica for a little while, I'm on to the things that we see out here in Texas, and that's freight trains. So I'm on the freight train analogy. We want to hop on the train and take a ride. We don't want to, try to guess what that train is going to do next. Or the elephant, we want to be the flea on the elephant's back. We don't want to be the bug that's trying to make it switch directions, because we just get squashed. Anyway, news. So there's news coming up. Be aware of it. Do with it what you will. I don't really see these being terribly market impactful, but they could be. And, we just need to be aware and adjust our plan around that. If we're in a trade, like I said, if we're in a trade and you've got really tight stops, just the chop around the news could take you out. So you might consider, what to do with that if you're trading. Over here on Forex, what are we watching? Well, on the Forex side of things, it's been a pretty active morning so far. The London session was very active. We look across the board here for looking at this screen, and you can see a lot of our pound. See, the pound's been the big mover, right, coming into the U.S. session. We look at a lot of these pound currency pairings, and we can see, they've already, like the pound yen, for example. I mean, it's 138 pips on an average of 115, 120, right? It far has exceeded its range. Pound CAD, which is one that we looked at yesterday, which was actually a profitable trade, pretty much immediately as we were wrapping up class here. Pound CAD. 125 pips on the day so far on an average of 130-ish, 120 to 130. Pound Aussie, 174 pips on an average of about 130. So we've got a lot of our currency pairings that have moved close to or more than their typical ranges would be. So, looking for a breakout that we could trade today, there's not a whole lot left for us. The only one that's really standing out, there's two. You've got the euro versus the CAD over here. The euro versus the CAD, it's moved 55 pips. Its average is 80 to 90. Euro versus the yen, it's moved 65 pips. Its average is about 90. Had a really big day yesterday. So, I would probably favor looking to see if something really ends up happening over here with this euro and the CAD. I mean, they're trading right at the midpoint. Neither has been moving over the course of the day so far. The euro's been pretty flat. The CAD's been pretty flat. We do see the euro starting to move to, over the last few hours has been moving to strength, and the CAD has just been kind of hanging right here at the midpoint. So if we do get a burst of divergence where the euro, continues moving to strength, and then the CAD starts to move steeply and rapidly down to the weaker side, that would be the opportunity for us to hop into a trade over here on like the euro CAD. Obviously taking into consideration what's happening with the volume detail as well, but just looking at the range, we do have quite a bit left in what its typical range would be, so that gives us a plus on it. If we do get a strong move to the top of that breakout box, we should see some good volume behind it as well, in the direction that we're currently wanting to trade, which is to the buy side. We want volume favoring continued buying, so that would give us the opportunity to do that. But that's really the only one that's standing out, and even that one isn't great to me, mainly because we're just not seeing any movement. So this would be one that you're really kind of going to trade intraday. You could certainly just park a trade at the top of that breakout box to see if we get momentum through it. But that would be the one that I would start with. There would be that Euro CAD. I don't really see anything else that jumps out at me. The CAD Yen maybe, but both of those are below the midpoint here. CAD Yen over on our chart over here, we can see that CAD Yen is 36 pips for the day so far. Its average is 65-ish, but it had a really big day yesterday. It moved 112 pips yesterday. It may not, today it may take a little bit of a breather. So we'll see. But the one that stands out right now is the one I mentioned earlier, which is the Euro CAD. This one over here, for the same reasons I mentioned earlier as well. But we'd really want to see, you could probably drill down to this on a 1 minute level and watch and see if you really get a burst of divergence on that Euro going to strength and that CAD continuing to weakness. And at that point, it would give you the chance to break out of that box and see what see if you have an opportunity to let that continue on from there for at least a little bit of a win, right? All right, moving on over here to the futures market. What are we seeing out here? Well, continue. If we start with the S&P, we continue to see that we're in a long bias. So we watch remember what we're looking at to determine bias is we're looking at our 30-minute time frame and our 4-hour time frame using moving averages. These are just moving averages here that are telling us a 20 over 100. If the green's over the red, we're looking at a long bias. If the red's over the green, we're looking at a short bias. That's all there is to it. It's providing us a quantifiable way, though, to measure what our market bias is. And that's really important because these things can be subjective. And as you can see here, depending on what time frame you look at, you get different biases. So, I measure those over multiple time frames so that we can get an agreement and have kind of definitive direction that we want to trade. Does it mean price, or does it mean the market's always going to go that direction? No, of course not. But it at least gives us a quantifiable way to measure what we're doing, and that's the important thing when it comes down here to trading. So 4-hour bias is long, 30-minute bias is long. So that tells us again we're looking for long trading opportunities, and we continue to look for long trading opportunities until it rolls over. If something rolls over this morning and we sell off and the green line breaks below the red line here on the 30-minute, then that would give us a conflicting bias, and we wouldn't continue looking at that anymore, right? But for right now, we're looking for long opportunities. So how could we trade that? Well, we could trade it a couple different ways. We could look for breakouts. Actually, where we're sitting right now, this was the gap open on Monday's off hour, computer traded hours, and then we got into the regular traded session over here. But we had that gap open, and we can see how price has just kind of been hanging right around in here at that 506 area, 3,500 to 3,506. It's kind of that area, if you will. But we could look for pullbacks. So the first thing we could do, as long as our bias is still in agreement, we could look for pullbacks. So we could look for a pullback, maybe back down to this 3,500 area. Big whole number, it's going to have some magnetism around it. So we could look for price around 3,500, and see if we get a bounce off of that. If we break through it, you might want to just wait and see, what happens. If we break and close below 3,500, maybe we take a little different direction in the market. But for right now, keep your eye on 3,500. From breakout perspective, if we're just simply looking at breaks, so just a break and go, 3,510. It's been pretty well held up over here. You could even look at this 3,508 and see if we break above there and just keep going. But 3,510 is probably your better level, just to let it break through this noise over here and see if it can continue pushing on. It could even go as high as 3,515, which yesterday was a support level. It was a resistance level. It was a resistance level here. So if we break above 3,515, that could be your other breakout area. So you could look as low as this 3,510, maybe 3,515 if you're just looking at straight breakouts. And then of course the other way of trading it's the one that we teach and focus on as we're looking at at our various challenges, and that would be, waiting for price to continue to make lower highs and lower lows. So pulling back, lower highs and lower lows. And as long as our bias is still hasn't crossed, doesn't matter if it's converging, we just don't want the bias to cross. Waiting for market to make lower highs, lower lows, and then break of that previously closed lower high, and that'll give us the opportunity to jump into a trade. So there's a few different ways to look at it. There's some trading ideas for you. Again, like I've said before, which one's right? Depends on the day. Depends on the day. And it depends on which one you're going to use consistently. If you're going to be a bounce trader, be a bounce trader. If you're going to be a breakout trader, be a breakout trader. If you're going to be a trader that waits for the pullback and breakout, be that guy. If you're going to be a reversals trader, have a reason for why you're doing it and be that guy. Just focus. Don't try to be one thing one day, another thing another day. It leads to inconsistency. I can just tell you that from experience. I think if you ask any trader that's been in this game for more than a couple of months, they'll tell you the same thing, right? It's all about consistency. Now you go to TikTok and you ask one of those idiots there, they're going to tell you to do something different every day, blah, 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 and all their bullshit. But anyway, consistency is what it's all about and is what it takes. Over on crude, what's happening on crude? Crude, it's been a tough beast for us. Crude here has a long 4-hour bias. Technically right now it's got a long 30-minute bias as well. It wouldn't take much if this moves down and starts closing down below 43, that bias will roll over. But for right now, we're looking for longs, long crude. So, check this again before you begin trading, before you begin trading here in another, hour and a half, hour and 15 minutes. Check it again. But for right now, we're looking for long opportunities or whatever your trading time is. I said an hour and a half. Maybe you wait 2 hours before you start trading. Maybe you don't trade until 10:30 Eastern. Let the initial opening noise shake itself out. We should probably talk about that at another time. But anyway, what are we looking for here? Well, we're looking at a long bias. So what does that mean to us? Well, it means 4 hours long, 30 minutes long, we'd be looking for long trades. What does a long trade look like? Well, a break of 43.20 would be a great spot to go long. So if we're looking, you can see it was resistance, resistance, and breaking above 43.20 would be a move, a signal to continue long if you're looking for breakouts. If you're looking for pullbacks, 42.91 would be a great spot to pull back. Now, keep in mind though, as you're pulling back to 42.91, do keep an eye on your moving averages. If it crosses over and closes down there, that's going to be the signal that we have a mixed bias, which would tell us not to trade. But so watch and see where your moving average actually is at that point. But if it pulls back to 42.91, that could be a great spot for a bounce. So pull back, bounce, and see if it continues on. And then of course, there's the process where we're waiting and watching to see if we get lower highs and lower lows in order to take a trade. Yesterday, it just kept continuing back, so we never had an opportunity to jump into anything. Yesterday, it just kept making lower highs and lower lows, and that was it for us. So this is during the time that we're trading actually over here. So anyway, so that's gold. We talked about breakouts. We talked about bounces from down here. So breakouts up here, bounces if it pulls back to here, or pick your time of day that you're trading and trail your stop down based on the direction as the market pulls back from its typical direction or its bias. Gold is back on a long bias. We said same thing yesterday. 4-hour bias is long, 30-minute bias is long. So we continue to look for long trading opportunities. What does that look like for us? Well, it could be a pullback back down here to 1985. If we pull back to 1985, which was previous tops, that could be a great spot to look for potential buy entries, maybe even as low as 1980 for additional buys. Or looking at 2000, big whole number. We've cracked it before, broke above and ran on up here to 2080 and then reversed on us. So 2000, big whole number. If we break above 2000, that could be the spot to look for that breakout buying opportunity. And then of course, just the other method, which is waiting for price to start pulling back, making lower highs and lower lows, and then trailing our stop at the break of that previously closed candle. So a couple ways of coming at this thing, but the long bias is in place on gold. Right, so that's it. That's everything. We've hit it all. Been here about 20 minutes. I didn't get off topic on too many things other than the upfront talking about the event that's coming up today. So I'm going to go ahead and let it go, let you guys go and get on with your day. Yesterday, by the way, let me pull this up. There was a trade. Bing. There was a trade on gold yesterday. Unfortunately, it didn't catch this big move. We were long on gold. It broke above and just couldn't sustain it. Closed out a little lower than break even over here on gold. So, it cracked above, moved for us, trailed the stop up, at the bottom of those previously closed candles as price was moving in our favor, but it just couldn't sustain it. Looks like it got that move late in the day where it really took off and soared up to, close to 2,000. So we weren't part of that. That's okay. You pick the time of the day that you trade, and if the conditions come your way, great. If they don't, that's fine too. Remember, you're not going to catch every move. You're not going to win every trade. That's just part of it. It's part of life, right? So that's it for now. I'll wrap this up. I'll post that link. You guys have a great day. Talk to you soon.